moving back to Europe, Europe, I think the big difference, as I see it, with Europe is that you've got an ECB whose mandate is essentially to run a sounder monetary policy than that of the Fed. Yeah. And they are now under great pressure from everyone except Germany and perhaps Finland.
Holland maybe.
And Holland maybe, yes. They're under great pressure to print, because that's the only salvation anyone sees. What's your take on it? How do you think that's going to evolve?
Well, again, I must distinguish between two different scenarios: the short run and the medium to long term scenario. In the short run, I think that and I must say that I'm not in the mainstream of the market analysts in this regard. I think that the ECB must support the stable and sustained growth of M3 in the Eurozone. This may require that these extraordinary expansionary measures may maintain for a while. But what is most important to me, the ECB must change its rule, its monetary rule, in order not to repeat in the future, in the next expansion, hopefully in the next 2 years' time, maybe, the same errors they have made in the past. What I mean is that in the past we were told that we were living under price stability, but price stability in terms of CPI, Consumer Price Index. And we didn't pay enough attention to the asset prices, financial asset prices, and real prices of real estate.
It's the old thing about that it was a credit fueled boom, wasn't it?
Exactly.
Particularly in Spain, Italy, Greece, and so on and so forth.
Exactly, and they thought that, monetary expansion was not so important. Obviously, they didn't say this in their reports, in their official statements. But as far as I remember, when I was studying this situation before the crisis, and every time I ask any member of the Parliament, of the European Parliament, of any member of the European Central Bank about the extraordinary growth of M3, the monetary supply, broad monetary supply in the Eurozone, they said, okay, there must be problems with accountability, with the statistics. There must be changes, structural changes between M2, M3, and M1. Okay, technicalities. But at the end of the day, they didn't pay enough attention to the excessive money growth. And in my view, they should pay more attention in the future to the consequences of excessive money growth on prices, but not only consumer prices, but on the whole prices of the economy.
On the whole thing, exactly. Yeah. It seems to, it's interesting you bring that up, because it seems to me they've made exactly the same mistake as the Peel Act, Banking Act of 1844, which recognised the value of real money and the notes that are issued on the back of that the gold and silver had to be there, but didn't recognise the effect of expanding credit in banks and the way that credit can be manufactured out of thin air.
Yeah, the thing is that, many people still think, politicians, and not only politicians, still economists, I must say, that they think that just printing money, you create jobs. I know it sounds silly.
It's a myth.
It's a myth,
yes.
But many people defend and support this myth in the interviews and in the parliaments.
Oh, it's for most people, it's a given, isn't it? They assume that this is true.
Yeah, it is something that, many people claim that the ECB should be more expansionary. Yeah. And I say, how come? How can they be more expansionary? With the interest rates around 1%, extraordinary lending facilities to the banking system, this is extraordinary in historical perspective. So this is expansive.
It is, and the ridiculous thing about it is that the only way in which you can really create economic growth is by having savings as a healthy mix, if you like, in the consumption and savings. And on the one hand, we've got interest rates which are so low that they're destroying savings. Actually, to get the economy recovering, you need higher interest rates to encourage people to save so that you get the capital investment, and that way you will get something which is more long-lasting. But it can only be determined by the market. It can't be determined by central banks, because it seems to me that a policy committee, a monetary policy committee, comprised of people who have very little business experience, in many cases none, they're entirely theoretical, is actually not the best way about
academic
going
at
about
best.
it.
Yeah, you're right. Well, Well, the picture that you're drawing is exactly the one that I have in my mind. It's very much pessimistic because I don't think they are going to raise interest rates in the short run in order to keep savings recover a little bit, so thus investment is recovering and so on and so forth. As I said before, I think that the ECB must sustain money growth, stable money growth, in order to recover nominal income in Europe. That's what I think, really. And afterwards, just afterwards, it could be a question of months, a question of, several quarters, 2 or 3 quarters. Afterwards, the ECB must resume a conventional, a more sound and sustainable monetary policy. So yes, they should increase interest rates in the near future, in 3-4 quarters ahead. Because this is the only way to achieve price stability, and price stability is a precondition for monetary growth, for economic growth.
One of the key points behind what you're saying is that money is actually a product of the market, not of government.
Yeah, it should be.
Yes. Well, absolutely it should be.
But
it's not.
It should be, yes, because at least there is some competition between the issuers of bank money. But this is a very restricted competition because at the end of the day they have to be licensed by the state, and they have to issue their bank money in terms of the money of the central bank. So this is a very imperfect system,
absolutely,
I may say. So this is not the best way to achieve a sound money policy, I'm afraid.
I'm afraid we're going to have to live with the system for the moment. It's been fascinating talking to you about central banks, their role in money creation and so on. And let's hope our worst fears aren't realised. Juan, thank you very much indeed.
Thank you very much.